Yo, good morning, traders, and welcome back to another episode of Market in the Morning. We're looking sharp, we're feeling sharp, and we're ready to make some money. Guys, smash that like button if you're ready. We've got some cool things to cover. Obviously, we have some new Iran headlines that have been moving markets. We're seeing a little bit more of a downward move. We had a recovery overnight on the S&P and NASDAQ, but now we're back more into that uncertainty area. So guys, hit that like and subscribe if you're ready to make some money. We also have a new market update, MRKT AI update that I want to show you guys. It's very cool, completely separating the high impact from breaking news. This is a sick update. I can't wait to show you guys. All right, guys, let's pull up our market terminal and let's dive right into the update. Now, we do have some economic data today at 8:30. We have durable goods, nothing too major, so it's not like a CPI day. CPI is going to be this Friday, though. So, guys, make sure you tune in. I'll cover CPI live here. Very important to see where inflation is currently sitting at with oil prices as high as they currently are. So let me just make sure settings are all perfect. Wonderful. Guys, great. Good morning, breaking news feed. It is sick, guys. Let's take a look. I'm going to show you right now. Let's actually pull it up in the news feed tab. And so, guys, we originally have all, and this is going to be all of your news feeds, all of your headlines. We have popular, which is where you guys get to vote on which headlines you think are the most important and relevant. And then we had high impact, but now we have high impact and breaking news. Now, breaking news is where we obviously get our breaking news insights from, but high impact is where we really started to upgrade and take things to another level. Look how cool this is now, guys. If you're looking at a high impact headline, let's look up one for Iran. Let's see how that is on the search tab. Okay, so search tab we don't have. We do have a high impact search tab, high impact. Let's see Iran. Trump on Iran, a whole civilization will die tonight, never to be brought back again. This is some crazy headlines, guys. This was 15 minutes ago. I actually want to check the market's reaction to that. 15 minutes ago was right over here. We have our 805. We had a bit of a reaction. Didn't really take us anywhere fast. So let's go back to the update. High impact. And what's really cool with this now, guys, is it comes with actual charts. You could click which chart you're looking to see, and it's going to show you when the headline came out versus where we are right now. How sick is that, guys? No other terminal, no other news feed is giving you information quite like this. And you could still hit the brain icon if you're unaware of what that news catalyst is. What's going on, veteran? Yes, sir. Good morning. So Trump. Headline escalates U.S.-Iran tensions ahead of Trump's deadline, threatening strikes on Iran's infrastructure unless the Strait of Hormuz reopens. This drives oil prices higher due to supply disruption fears. Guys, really quick, I just want to show you the charts of oil right now. We're back at $115 per barrel for crude oil. This is freaking insane. So I'm sure you guys remember back over here when we had the initial spike, we started to attack them. Yo, good morning, Eric. What's going on? We had our pullback. This was a Tuesday. On this Tuesday, me and the lab came on here for the Market in the Morning show, and we told you guys that this pullback we're seeing on oil, this is not the final straw. We're not coming back to those regular prices yet. It's most likely a pullback for positioning, right? Repositioning. Now, that could be any type of repositioning. Possibly some institutions that missed their long positions on here. They are looking to re-enter on a pullback, or even some institutions that are looking to exit their short position. They're not going to exit somewhere way up here. They're going to exit somewhere on a pullback. So they were able to exit, possibly re-enter to the other side. And here we go now back at 115. This was about 118. So guys, let me know in the comments. Do you think oil is going to make its way to $120 a barrel? And do you think it's going to happen this week? Because right now, the headlines are telling us, oh, we have Tuesday. Today's Tuesday, 8 p.m. Eastern is our deadline for Iran. There has to be some type of ceasefire. At least that's what some of the headlines were saying. But we know that most of these headlines, most of these ceasefires, they've had no follow through. So as traders, anticipators, spectators, we have to spectate and really wait till we get some real clarity on a slowdown of this war. Sounds like we got some new headlines coming in right now. Let's check our breaking news. Pakistani security official, Iran signals flexibility on talks, but still pushes preconditions. Iran missile strikes on Saudi targets risk derailing negotiations. That was just now, guys. Vance says the U.S. feels confident that it can still get a reasonable a response by 8 p.m. tonight. So we'll see about that, right? We know that we're waiting for that 8 p.m. That's our deadline. What happens afterwards? Are we going to get some type of crazy response that Iran's like, oh, well, no, we're not going to do that. And then the U.S. blows up more of their infrastructure. Now, remember, guys, it's not just the U.S. attacking Iran. It's the U.S. causing a disruption across the globe, right? It's causing higher oil prices, higher energy prices, not just for us, but for the entire world. A 20% pain point on the oil inventory that we're seeing right now is causing higher prices, not just in the U.S., but everywhere. So let's see. And it's going to take a long time too. Guys, once this war is over, it does not mean that, oh, great, oil's back to where it is. Those big ships that bring the oil through the straits, that bring the oil, ship it across the world, they move anywhere, I was reading up on it, from 10 to 15 miles per hour. That's almost like somebody riding their bike. Imagine somebody saying, oh, I'm going to ride my bike to bring you your oil across the ocean. So when this war ends, it's still going to take a while for oil prices to start to come back down again. So there's always that, something to keep in the back of your mind to remember that, yeah, sure, let's say we get some type of news tonight. 8 p.m. comes out, they got something signed, ceasefire occurs, and it's real this time. Okay, well, oil prices aren't just going to suddenly drop. Sure, we might see a reaction back towards 100, but we're not going to get back within our range of that 60 to 70 that oil has been notorious to stay in for years now. So be very careful, be very wary, and don't forget, guys, we do have durable goods in about 3 minutes. We have CPI this week as well. Let's check our economic calendar, and we can see our economic events. So durable goods, they're expecting a negative 1% forecast, minimum -5, max 4.3. So they're giving it a 10% window right there. So I'm not expecting a big surprise here. Remember, guys, markets move on 3 emotions: surprise, uncertainty, and optimism. When we get some type of surprise on an economic event, that's going to give us a big move. We get optimism, something came in stronger than expected, gives us a big move. Uncertainty, something's weaker than expected. We are unsure how it's going to impact the market. Investors see unsure and say, I want to be more stable. They take their money out. That's why uncertainty drives markets lower. So durable goods. This is key input for central bank rate decision, signals overall economic strength and trends. High impact released often moves currencies on surprise. There's that key word, guys, surprise. And prior month revisions can amplify the initial reaction. Higher than expected reading signals economic strength and is typically bullish for currency. A lower reading suggests weakness, putting pressure on currencies. Guys, if you're investing and if you're a day trader trading S&P, NASDAQ, we would want this to come in a little lower than expected. We want to try to see that dollar come down as it's putting a lot of pressure on tech right now as well. Let alone gold, guys, and any gold traders in here also seeing a lot of pain in gold. Let's take a look at gold, guys. Gold climbs to 4,700 on fresh Iran strikes, Tehran explosion, escalations intensify. So we have our upside target of gold, 47.50, downside pullback area, 46.45. Let me know where you think gold is headed today, guys. What's supporting the buys? U.S.-Israeli attacks target Iran's airport. Trump vows power plant bridge strikes on Iran. Strike kills 18 in Iran's Alborz province residential area. My apologies. Jeez. Israeli military completes Tehran infrastructure strikes. So Israeli military also striking on Tehran. Let's take a look at our gold charts, everybody. See what trend, see how strong we really are on gold. We finally started to create some higher lows here on gold. You guys remember we had this was our all-time high, 56.58 to our recent low. We had a 26% pullback on gold, massive pullback, putting us in a temporary bear market on gold. But once it was able to trigger and hold back above 4,500, this is when we might see some volume, as we see, start to pick back up again. But something to keep an eye on, guys, is the overall volume. When we had this great bull trend right here, we had consistent buying. Look at how steady volume was. But now at this point, we had the sell-off. Volume remained very low. We had one more break lower. This is when we broke below that 20%. Volume picked up again because of the squeeze that's occurring. Everybody that was buying gold since late December ended up getting wrecked here. Even people that were buying gold, look at where this pivot was, guys. Yep, exactly. This pivot comes all the way back to here. So anybody that bought gold since early November of last year, guys, that is 5-6 months ago now. They bought gold, they've been holding, they were up on their position, let's say max about 36%, just for it to come back on them, stop them out possibly at break even or for a small loss. So when that happens, that volume picks back up from all of these days. All of these buyers stopped out. Markets are able to reverse on that temporarily, but we're back to where we were before in that look at the volume. Very weak volume when buyers were trying to step in. Volume picked up when sellers were able to take strength. Now we're seeing weak volume again while buyers are trying to step in. So I'd be careful that this is just a short-term pullback on a more overall bearish trend on gold. Something I really want to point out, guys, too, is markets can't move up forever. And a lot of people made a lot of money on gold in this last run this past year. Over the past year alone, guys, 2025, beginning of 2025, gold moved up 97% from low to high. That is insanity. From 2,800 to 5,600. That's mind-blowing. That is something that we will rarely see in our lifetimes, that we're blessed to be able to see in our trading journey and gain that experience. But now we're getting some pullbacks. We hit this major pivot. If gold's able to break below 4,000 again, I really think the 3,500 is in store, right? We see that our consolidation, our rally. We pulled back to it, consolidation, a drop, right? And that could take us back to our next point of consolidation, which was down over here, which, like I mentioned, above 3,600, 3,500. But we'd really need to see those sellers and selling volumes start to hit on gold again. And what's cool too with market, guys, is we're able to see, well, what could help drive price lower on gold? If we hit our swing trading bias, which shows us slightly bearish still, what's supporting this bearish bias on gold? Market scaling back Fed cuts. This is huge, guys. Fed rate cuts. We were looking at almost an 80% chance at some point that this year alone we were getting 1 to 2 rate cuts. It was almost 90% chance that we were getting 2 rate cuts this year just a few months ago. Then comes inflation not cooling as expected. Unemployment did move higher, which does help rate cuts, but with higher inflation, we cannot cut rates. Then came the whole Iran war, which causes oil to move higher, which is going to impact inflation to the upside. No more rates on the table. Right now, we're looking at April's meeting, April 29th. We can hit our compare. This is on our Fed Watch tool. And we see that at some point for April, we had a 16% chance of a rate cut. Now we have a 0% chance of a rate cut. We have a 97% chance that we hold rates by April and a 3% chance that we're going to hike rates, which means increase. Now let's take a look at July. Something to note, guys, when it comes to the Fed is that Jerome Powell's term ends in May, and Kevin Warsh, if he's sworn in, will be taking his place. So a lot of people by July, we had a much higher chance of that rate cut. People were thinking, oh, Warsh is going to come in. He'll want to impress some people. Perhaps we're going to get some type of cut the moment he comes in the first meeting. Well, that was at 43%. We had odds of us holding rates just at 39, so we had a much stronger reading, 43% for one cut. And we even had 15% chance for 2 cuts. This is prior, right? This is comparing. Now we're only looking at look at this, guys. This is laughable. A 0.13% chance of a rate cut in July now, and a 4%, almost 5% chance of a rate hike. This is going to add to inflation. This is going to take away from inflation, but it's because inflation is moving higher. So something to keep an eye on. We want to be extra patient. Fed Watch, and something that's most important about knowing how to read this tool is that this is where some of that optimism comes from in the markets. When we're seeing that we have a high chance of a rate cut in the next meeting or the meeting following, that brings optimism. That's exactly what we saw last year when we were rallying from October to November to December. And then December rolled around and we started to see range. Even though December we got a rate cut too, the reason we started to see range is because the forward looking was saying, oh, well, you know what? After this cut, that's it for a while. That's it for a while. How does that bring optimism? It doesn't. It brings a standstill, it brings a range, and it brings exactly that in the markets. Now, gold had no problem continuing its rally from January into end of January, but did have that major pullback when those rate cut odds really started to plummet. And something else to note, guys, a lot of people were really still bullish on gold over here. Gold sold off on this one candle alone 10%. 10% we're looking at this candle right here, 12% in a single day to the downside. One of gold's strongest days in history in the sell side position, right? We have to be aware of these type of circumstances and situations in the market as day traders and as investors. So what else supports gold to the downside? U.S. Treasury yields elevated, 10-year yields climbed to 4.45%, increase real yields near 2%, pressuring non-yielding gold. Inflation fears from oil surge. This is another one that's big. Higher energy prices stoke sticky inflation, delaying central bank rate cuts. We just mentioned that. Let's see, here we go. Fed Williams expected 2 to 2.5% GDP this year with stable unemployment rate. Okay, very good. ISM service pricing paid surging. few things that are keeping gold lower right now. Guys, let me know where you're looking for gold. Let's mark out some key levels and see what's going on. We have gold right here. Let's break it down to our hourly time frame and just find some levels. So last time we were here, guys, it was Friday. And Friday, we had news. So we didn't really go anywhere. Actually, Friday, commodities were closed. Gold didn't go anywhere at all. But Thursday, when we were hosting the show Thursday, check it out, guys. We had our two areas we were watching. This is where we were Thursday. This is Wednesday, Thursday, 1 a.m. This is the area we were covering in the stream. It said we're watching for our resistance above 4,700, support around 4,585, near the same levels that market was giving us, right? 4,400. Oh, day trading, 4,750 and 4,645. And that gave me some clarity on these levels. So right now, while we're trading in the middle like this is a no trade zone, guys. You do not want to get caught up in chop, whether you're trading S&P, NASDAQ, gold, silver, oil, whatever you trade. When you mark your zones, you mark your levels, you find whatever your technicals are telling you, and you find that price is range bound, but not coming near either level, this is a clear sign to not trade. I was telling some people too the other day that when we come near our level and we get some type of significant price action pattern, that has a lot more significance and strength than if we're sitting in the middle over here and we get a random doji candle. That doji candle doesn't mean anything to me if we're in the middle of nowhere, middle of no man's land. So gold, I would definitely stay a little patient on. S&P and NASDAQ are definitely a bit more my speed in markets like this. Now we can take a look at different things, volume profile, supply, demand, whatever key levels you look at. But what's really important when we are charting and when we're looking at large assets like gold, like silver, like S&P and NASDAQ, we want to look at certain key psychological points. Now the NASDAQ is just reaching back again. I'll put back the other NQ chart, the 10% correction level. So 24,174, this is 10% from its all-time highs. That officially puts NASDAQ in correction territory. Now, we just closed back above that yesterday for the first time since just the 2nd. This is Thursday. Since then, we were able to crash below lower. We went as low as 14%. So NASDAQ was seeing a lot of pullback, really presenting a great buying opportunity on the long term. But overall, we want to keep an eye on other equities too. What's Nvidia, Google, Apple? What are all these other tech stocks doing? Are they showing support or are they still pulling back? We're looking at Nvidia right now. We see it was at the bottom of its range off that 165 and it held. It's right back to 175. The next area I would look for on Nvidia today is if Nvidia could hold 175, make its way towards that 180. We really have to keep an eye on things like Nvidia and Google and even Micron during these types of pullbacks, because if our semiconductors and our large big tech can start to hold, that's going to give us some more insight into, yes, buyers are stepping back in the market. But as we see pre-market, we're already down on Nvidia about 1.3%, $2 move to the downside overnight, already showing a little bit of a sign of weakness. Tesla, I'm not too concerned about when it comes to reading equities and looking at large caps like NASDAQ and S&P. It really can move either direction it wants and not have that big of an impact on our tech. Amazon is trying its best to move higher, but still stuck within a very tight range. Meta still trading below 600. That is crazy. Meta was at highs of 796, so a pullback as much as 33%. Guys, crash market territory is 40% when it comes to equities. This is insane, really 50%. Crazy pullback. They are now trying to make their way back higher. But just like Nvidia, the overnight session, we're seeing a little bit of a pullback. So coming back to NASDAQ, let's find some levels of interest, some areas to keep an eye on, and let's find some trade setups. First thing I note right away is this zone that held up prior, the previous day. It's already held up overnight. I'd want to look at a bit of a lower time frame, a 15-minute, and just like that, we're able to spot our range. We're able to pull up market as well, find our day trading bias, still slightly bearish. We know that, yes, there are headlines coming out that things might be de-escalating, that we have an 8 p.m. deadline, but this is going to be the 5th deadline that we have for this war now. So in all reality, markets are also seeing this as Is it real? Is it really going to happen? What's up? Welcome. Yes, sir. Stay adaptive till 8 p.m. or really 9 p.m. Eastern. We may not see any moves until prime New York session time. Yeah, exactly. Keeping my expectations low for today's session. Why are you keeping your expectations low for today's session? Guys, let me know what you're expecting today from the markets. And let me know how cool this market update is, man. That is sick. Trump on Iran. We will find out tonight. Since he said that markets have pulled back a little bit to the upside, saying we'll find out tonight, possibly driving a little bit of optimism. Trump on Iran, a whole civilization will die tonight. We saw this one already. This is quite the statement. Can you imagine if we had any other president saying things like this? No bridge and railway targeted by strike in Iran's Tehran province. Okay, so that's good. I know they mentioned, guys, there was a tweet that said Trump said that it would be railway and I think it was energy infrastructure day on Tuesday, which means that they're going to attack Iran very hard in those areas. So we'll keep a very close eye on that. And guys, when you're trading today, it's extremely important. You want to keep that breaking news or high impact tab open because one headline can shift markets. And when we have market open, we're able to take advantage of that because when that headline comes out, market gets it that second. And that's when we're able to say, okay, that came out, that has strength. If we start to react, I'm exiting my position. It is not worth it. Or on the flip side, if we get a really strong headline that says, hey, we're bullish. Trump just said he's going to stop it. If Trump says we're going to stop attacking them for a while, or we're going to give it a break, anything that gives it a break, anything that stops the attacks, think of it as relief, right? We're finally able to breathe. The markets are able to breathe. That's optimism. We talked about the three emotions earlier. That's optimism. Markets can breathe. We're able to pull back. That's a relief bounce. That's the only way I would really possibly look for longs in markets like this. Other than that, I'd really be looking to short the pullbacks today, not looking to buy. But yeah, NQ bearish, I'm with you on that, man. 100%, 100%. What I'd love to see, though, I'm not going to take NASDAQ short until we're able to clear this level that we held as support yesterday. If we're able to clear this level, though, we have some ways to go until that next consolidation point, which, again, guys, the reason we mark out, and the reason I mark out consolidation points at least, is this is where volume was able to consolidate, which a lot of times means there's a large volume shelf there, right, depending on the structure we had. Now, the reason, too, is because when we have that consolidation followed by a very strong move, the strong move is so fast in the markets, what happens? Any orders that were buyers down here that could not get filled are still waiting down here to get filled. Those buyers are down here. They bought once, market squeezed on them. They're waiting for price to return so they can buy again. And on the flip side of that, guys, people were selling all the way down here. I'm not talking about people like me and you. I'm talking possibly levels of institutions, right? They were selling. If they're selling down here and markets move against them, they're not buying up here for a loss. If it's an institution, they're doing just fine. They could hedge that position until markets get back to their area, and then they could buy back for break even. And that buying back volume, that's still buying volume. That's going to help markets react to this level next time we test it. But let me throw a cherry on top of that, guys. Not only are they buying back to exit their short, but now they might buy back yet again to re-enter another long position. So not only are they buying once, they're buying twice. This buying volume is what I look to find to see that momentum to help us hold these areas. Yeah, we'll see about the ceasefire comments for sure. 100%, man. For now, I'm ignoring Trump. My focus is on Iran and Israel more. Because the market is not buying his comments anymore. Great call on that, man. Yeah, a lot of the comments we're seeing from Trump, the market's not giving us the strongest of reactions. We were getting those like overnight moves. I'm sure you guys remember when he, what was it, the other day when somebody bought $1.5 billion worth of ES futures. And then just minutes later, he announced that and we spiked up very strong. I'll see if I could find that. I want to say... it was somewhere. I'm sure you guys remember it. It was a pre-market day. It was at like 7 in the morning when it occurred. And the spike was insane. It was somewhere over here. Had to be. Maybe they hit it by now. I'm sure they did. Guys, let me know if ceasefire comments from Israel and Iran, then I think it will be. Yeah, I 100% agree on that. Because a lot of times, too, what we're seeing with some of these headlines is we'll see a headline where Trump is saying, oh, we're going to back down, we're going to wait, blah, blah, blah. And then we get a headline saying Israel attacked Iran again. Now, some people might think that has nothing to do with the U.S., but on the contrary, guys, this is considered the U.S.-Israeli versus Iran war. That's U.S. and Israel on the same force against Iran. So if U.S. wants a ceasefire, but Israel saying not yet, then unfortunately we're most likely not going to get it. Yes, sir, Travis, you already know it, man. So let's see. Let's check out our economic data. I do want to see how durable goods came in. I doubt it gave us that much of a reaction, or else our headlines would have been popping. See that right within range, guys. We have our actual was negative 1.4. Forecast was negative 1. So very close to the forecast. Definitely within that range. Not giving us any insight. Tomorrow, Wednesday, we don't have any big economic events, so don't worry about Wednesday. Thursday, we do have initial jobless claims, and we have PCE, guys. Core PCE, GDP as well. 8:30, guys. Ooh, we got a big day this Thursday, guys. This Thursday, Jeev is gonna be here. We got a special episode. Super excited about that. Hope you guys are excited too. Make sure you guys hit that like button. Of course, hit that like button. Make sure you're following for more episodes of Market in the Morning. I host these every week, Tuesdays and Thursdays. Usually Tuesday we have Nalab. Thursday we'll have Jeev every now and then. They are the co-founders of our wonderful Market AI terminal. This week, Nalab is on vacation. Got to give a big shout out to Nalab. Much deserved, but he works his ass off. Great hard worker and just a phenomenal platform he's put together for us. Really great guy overall and fantastic at what he does. High impact, don't forget our high impact tab. I really am going to be messing around with this myself. I wonder when you copy the image, if you paste it, does it include the chart below? That would be very, very cool. Let's see. So guys, make sure you hit the like, make sure you hit the subscribe. This is Market in the Morning. Tuesdays and Thursdays we cover it, and I do host special episodes when we have some type of big event, just like CPI this Friday. I'll be here for this Thursday for GDP and core PCE, and this Friday for CPI. So calendar events for ES. Here we go. Another little update here. Yo, bro, you know it, man. Nuggets all around. Durable goods order signals U.S. manufacturing and business investment strength. We knew that came within range. I know, bro. I got to get Mooj on here. I was talking to him. He's in a, you know what? He's in a different time zone. So it's a little tricky, especially because he covers the London session. So he's up super early, but I'll try to get him on here. Let's see. So you could check out, is a great question. Hey, do you have a course step-by-step from 0 to 100 on how to use the app and put it in your strategy? So that's a great question. We do have some phenomenal videos right here on our YouTube page. Those are created by Sebastian and Jack. They are two of our content creators here on the market team. Really great stuff. We also hosted a webinar recently that should be on our YouTube as well. And that also just gives you some insights in how to apply some of these fundamentals and how to apply market into your trading. But if you have any questions, definitely feel free to join these episodes and ask. I'm always happy to help, and I'm always happy to break down market for you guys. Market is a great tool to help give you that clarity you need to confirm, hey, this trend is working or not. So let's see. As for using it, how to apply it, what's great is you could add a watch list and you could add the symbols you watch, whether you trade specific stocks and you want to add Tesla, or you want to add Nvidia, or you want to trade futures, you trade Forex, anything, guys, you name it, and market covers it. XAU USD, right? If you want to do the gold pair of Forex instead of the futures pair, you could then click gold, and now it's going to give me a little bit of gold struggles 46.50. Awesome. So we see that 46.50. Give me all right. Sorry about that, guys. A little technical issues. Like, how do you use fundamentals as drivers of your bias and timing the technicals? Okay, so I'm using 2 to 3 days. The app is still new. Okay, that's fine. Yeah, give yourself some time. Use the app. Definitely get a little insights into it and get some reps in, right? I always talk about with trading strategies too. You can't just jump in a strategy and expect it to work. So take some time, dive into market and look at some of the tools. And it's not just the headlines over here. It's also the economic calendar. There are tons of great aspects and great tools within market that you can use to gain some an extra edge. It's got a news feed, it's got the bias, it's got your watch list, it's got what's supporting, what could flip it, and your economic calendar. Look at this, guys. We even updated our market AI sentiment, war uncertainty, extreme fear, technical breakdown. This is really cool, man. I'm just seeing this update right now. Yeah, not much will happen until Iran responds and inflation data. I'm with you on that. Definitely got to see a stronger response from Iran. Something, again, a ceasefire level of response. And yeah, inflation data this Friday is going to be huge, huge, guys. And it's also going to be big for next month, too. The longer oil stays higher, the more inflation will be higher. So, guys, that was this episode of Market in the Morning. I hope you guys had a great time. Really, some great gold nuggets in here. How to use market, the bias we should look for today, and possible trade setups as well. If we could really start breaking lower, we were looking at NASDAQ. If we could get back below this 24,100 level, could really look to see possibly 24,000, possibly even 23,900. That's another 200 points away from that 24,100. So guys, have a great rest of your day. Trade carefully. Make sure you use market to help determine that bias, and make sure you have your breaking news up as well. Yeah, look at the market bias, mark out your zones, pullback levels. Yeah, exactly. You could use the pullback areas and the target levels to co-align with your own technical analysis to help give yourself that extra vote of confidence. Guys, I hope you guys enjoyed the episode. Hit that like and subscribe. Don't forget to join me this Thursday. Me and Jeeve will be here. Got a lot of economic data coming out that day. And Friday, I'll be hosting a special episode too for CPI. Guys, have a great day. Happy trading, and I'll see you next time.